Peter Schiff is taking his chance to troll Bitcoiners even when Goldman Sachs predicts gold losing market share to Bitcoin in the coming year. We'll hash over Jerome Powell's reconfirmation hearing this morning just ahead of tomorrow's December CPI report, and my guest and I will discuss what actions the Fed might take in the coming year and the possible economic and political ramifications of those possibilities. And finally, what is going on with YouTube banning Bitcoin Magazine's YouTube channel? I'm Nate Martin, and welcome to the Bitcoin Effect.
What on earth got you interested in Bitcoin and cryptocurrencies?
Okay, so what's Bitcoin?
Bitcoin is...
What's Bitcoin?
Inflation-resistant money.
Bitcoin is the strongest asset the human race has ever invented.
The Bitcoin Effect is proud to be part of the Bitcoin Spot, a collection of podcasts and forums on Twitter Spaces where you can participate in the conversation with some of the most knowledgeable names in Bitcoin. Visit thebitcoinspot.net for a glimpse of our lineup. The conversations in this Twitter space are being recorded for use on various media platforms, and any contributors to the conversation irrevocably consent to the recording and distribution of reproductions of the contributor's voice and performance as part of this program. This isn't the first time that this has happened, not necessarily to Bitcoin Magazine, but to other Bitcoin and or crypto market content creators. So evidently they were in the middle of a live stream when this happened. So was anybody actually part of that live stream or that was actually watching it or anything when suddenly it just went off the air? Who was actually part of it, and what was the conversation when it happened? Did that have anything to do with it? Log, I know I kind of tried to message you earlier and say, did you have any idea what was going on with that?
I don't, and I've, only probably know what you know. It went down, I guess, during the middle, and some people tweeted about that. Apparently, they were talking about Kazakhstan, and so I think there's speculation that may have triggered it. Now, YouTube seems to act fast and think later. Like, I remember Dennis Porter's channel was taken down because somebody mentioned in passing January 6th of last year, and then, they appealed it and got it back up in short order. So I would expect that that's what's going to happen with Bitcoin Magazine. I don't think that YouTube is going to take down a channel that large without really good reason. I think they just triggered something, and they were too fast, probably an algorithm or something, or some poorly trained employee. But I would be very surprised if they did. If the ban was permanent, then we have a whole lot more to talk about in the Bitcoin community.
Yeah, we do. Because I would love to have somebody who's actually a contributor to Bitcoin Magazine request the stage and actually talk about that. Because obviously, for those of us who are content creators, I mean, last week, and I think that it was more technical than it was somebody actually watching us. I mean, I was talking about Twitter Spaces last week, and all of a sudden, I was talking to nobody. The spaces just went down. And I think you warned me later on and said, you know what, maybe you shouldn't be talking about them when you're actually on one of their Twitter spaces. And so, was something like that happening on YouTube? And, I suppose that's a conspiracy theory type of question, but it just leaves you wondering all the time as to who's listening at what point in time and what are they listening for, and by what standard are you supposed to try to keep yourself in the lane. Matter of fact, you just mentioned January 6th, and I was worried that the Twitter spaces were just going to shut off automatically already. So, I don't want to be paranoid. I want to be able to I want to be able to struggle with ideas. That is the main point of any conversation that I have when I'm in front of people that I don't necessarily agree with. But at least can we just have that tug of war, and can we disagree and then still leave having dropped the rope and not having hurt one another in the process of having that discussion? That's where we need to be. And unfortunately, there are too many people in power or behind the curtain that are pulling too many levers that are making it difficult to have those conversations. That's just my opinion about that. My big question to Bitcoin Magazine is this. If they have 60,000 YouTube subscribers, And to be honest, that's not really that big of a channel when you consider some of the other content creators out there that are actually doing, Bitcoin and even cryptocurrency content. That's not that big of a channel. But when you take a look at the fact that they've got 1.9 million followers on Twitter, and you have the capability to do a live stream on Twitter, then what's just stopping you from just doing those things on Twitter instead of worrying about whether or not YouTube's going to shut you down because Alphabet's got a tighter grip on content than what Twitter might have? Matt, you've joined the stage. You've got something to add to that?
Yeah, I mean, YouTube has an enormous audience. We know the eyeballs that they can push to every single day, every single minute. So I don't fault Bitcoin Magazine from trying to reach as wide a audience and as diverse a populace as they can. Without weighing it, wasn't watching the live feed. I don't know exactly what they did or didn't say. I didn't parse through word for word the response they got back from YouTube. But I mean, this is, there's nothing new. You try to get your presence on as many popular platforms as possible and reach as many people. And yeah, it's obviously it's not the first time. We all remember this happened to Pomp's channel a month or two back, and I guess it'll just continue to keep happening, unfortunately.
Yeah, you're right. It is unfortunate. And I think a few months ago I was talking in some spaces where, are we getting lazy? And I don't think that we are. The thing is, though, is that these platforms are available to us, and more people, consumers, are congregating toward Twitter Spaces, toward YouTube, and toward other centralized meeting places or virtual meeting places in order to get information and talk about information. And it kind of leaves us in a place where we have to kind of count on these publishers. They're not platforms, they're publishers anymore, to allow us to converse in that style, as opposed to each one of us having our own website so that we can try to gain an audience to our website or to our specific server so that we can have an audience in order to say what we want to say. So that's kind of the tug of war that we have. I mean, I take a look, even I follow Prager University, and they just had some paid fact checker give them a low score to the point where even their own website provider decided to drop them. That's how far it's going now. So, these bans, something's got to happen, and I don't know whether it's got to happen congressionally or whether there just has to be more competition in the marketplace. But in so doing, then you thin out your audience just that much more. AFK, you have requested the stage. I'll get you up here as a speaker. It'll take a few seconds, but what have you to say? Connecting. There he is. AFK, you're on.
How's it going, everybody? Good afternoon.
Welcome in.
I'm not sure. Did he catch the question?
I don't know. Did you catch the question?
I did not catch the question. Sorry.
No, it's okay. We're like, he was there. We've been bantering about the Bitcoin Magazine ban and what are the steps that content creators need to take in order to either not have to worry about it or in order to stay in the lane without having to compromise on your message. What is the impact here?
Got it. So great. Yeah, and I did hear what you guys were discussing just now in terms of like Twitter's reach versus YouTube, and creators having the opportunity to, I guess in my eyes, to diversify how they plan to spread such content, right? And I just wanted to piggyback off that point because I think that is a key solution for a lot of these content creators is to, in fact, and I'm going to use the word to diversify, right? Because if you don't need to rely on YouTube, like you mentioned, and their stringent and conservative guidelines, and you can move your content to Twitter or to Instagram or to other medium sources, then it provides you the opportunity to not only not worry about, getting banned or getting, shadow banned, et cetera, from one platform, but it also gives you a greater reach for different parts of your community that may have access to Twitter Spaces more so than they have YouTube, right? So yeah, I guess it's not really a unique idea. I just wanted to agree with what you mentioned about just having the opportunity and the strategy to relay your messages over a diverse range of platforms instead of just focusing on one.
Yeah, the question becomes, how much peanut butter do you have to spread over how much bread? And the peanut butter being your audience, actually, because you know you're trying to spread a message, and reach is one thing, but having a, you know, I know that I have a number of people that come onto this show and to other Bitcoin Spot shows, and they're regulars. You know, they know my voice, they know what this show is going to be about, they know what it's going to sound like. And that's great. And yes, we're trying to get a bigger audience as well for people that are new. But if you try to just kind of reach out too far, you're going to lose that loyalty. Because you're going to have, you talk about secondary. You talk about the secondary platforms like Rumble or or Getter or some of these other places that are just going, you shouldn't be censored, you should come over to us. Well, that's great, but at that point, then I don't have nearly the audience on Getter like I would on Twitter, just because of how big and how recognizable Twitter is. So that's just something that we've got to deal with. But obviously, we want to be able to have conversations about Bitcoin that are intelligent, that are civil, and that will move the ideal of sound money forward. Yes, in as many places as we can, but as well as we can to the audiences that are already in place. So, you know, I just feel bad that Bitcoin Magazine's got to deal with this, and that, you know, obviously they're going to have to deal with lawyers and you know, a bunch of crap. And I go back to last week when we were talking about, you know, how many sats would they have lost if we would have had the orange check process from, you know, Michael Saylor's idea of having to deposit Satoshis in order to make sure that you behave properly. You know, are we at that point now too? It's just, that's all I really want to kind of cover with Bitcoin Magazine, because I feel bad for them. You know, we're not competitors. When we have a whole bunch of people that are trying to talk about Bitcoin, because there are billions of people that have not heard about Bitcoin or know anything about what's going on. So we all are trying to spread the same message, and we need to just uphold the rights of the people that are spreading the same message that we are, and hope that they do well, get their channel back, and are able to continue doing the work that they're doing. Log, I'm going to ask you to clear the room, although there's only a couple, I think, Matt and AFK, and we're going to keep Albie up here, and then we're going to go ahead and talk about Jerome Powell and 2 or 3 of the issues that he's got going on, and what Albie had to say a few months ago that said, hey, dude, the writing was on the wall. We'll talk about that right after this.
What on earth got you interested in Bitcoin and cryptocurrency?
Okay, so what's Bitcoin?
Bitcoin is...
So what's Bitcoin?
Inflation-resistant money.
Bitcoin is the strongest asset the human race has ever invented.
If you're listening to a replay of this episode of The Bitcoin Effect on YouTube, Spotify, or other podcast server, including Apple as of this week, thanks for joining us, and consider leaving us a comment or a review saying you'd like to hear more of what we're doing here. It helps us out a lot, and it also helps others who don't know much about Bitcoin to discover the program. If you want to join the conversation, make sure to join me every Tuesday at 3 p.m. Eastern, 12 noon Pacific on Twitter Spaces. Visit thebitcoinspot.net and click the link to follow at the Bitcoin Spot and watch for the link in your feed. I caught some of the hearing, and gosh, you know what? I don't know if I can listen to Sherrod Brown anymore, because being the chairman of that committee and how absolutely bent he is on throwing every political issue at a train engine. And let me explain that. Jerome Powell has a train engine, okay? He can increase the throttle, decrease the throttle, increase the brake, decrease the brake. That's basically what he's got. He does not have a steering wheel. And yet Sherrod Brown and Elizabeth Warren and a number of other senators are trying to inject these ideas that are saying, are you going to make this a top priority? Well, the top priorities that you're trying to tell me require a steering wheel, and I don't have one. And I almost feel sorry for the guy because he's sitting there just listening to all these senators just kind of position their ideas and their planks so that they can get either reelected, next year or in the next couple of years. And it bogged. I felt sorry for him just having to sit there and listen to that. And, there were yes or no questions. And there were a couple of times it went, yes. And it was I had to empathize with him because I had to sympathize for him because he was just sitting there listening to people talk, and he just had to say the same thing over and over and over again over a period of 2 hours. But that's actually really a secondary issue. There's two things that are really on our minds. One is tomorrow's December CPI report, and then what does he do with the throttle and what does he do with the brake and what are the ramifications of those things? And to have that conversation with me, I have brought in Albie, who over the last year has sold all of his real estate and bought Bitcoin. So he's gone all in. And back in October, he sent out a tweet that said, and let me find it here because I got it. There it is.
I posted it up in the Nest too.
Oh, did you? Yeah. What? Am I a complete macro idiot? I was worried about this back in October when you likely should have been. If you wanted to de-risk, it was back then. Ideally, if not, then at least in December when it was in the 50s. And that was, it was the earlier tweet. Powell signaled quite clearly that the taper's coming. So you said the writing was on the wall. For my money, I think you were right. Now what happens? Because we've got the December CPI, and what's coming down the pike with some of the things that he's got available to him when it comes to the throttle and the brake.
Yeah, for sure. And I'll just say, this is really cool, actually, Nate. I haven't been in one of your spaces yet where you did this, and it's much more professional. I'm so used to the Twitter spaces where we all just hop on and then just free for all and go back and forth and get crazy. So this is really cool, man. Thanks for the opportunity. I'll just preface it by saying I'm not some kind of a genius. I don't claim to say I am. I'm just a regular person trying to make sense of all this as we all are. So I will preface it by saying that, but I think the big thing that I was sort of trying to get across late last year was that, hey, this was signaled ahead of time. Right. And if you were sort of quote unquote reading the tea leaves and you were worried about it, you should have de-risked your portfolio then. And I will say, I'll be the first one to admit, I didn't execute as well as I should have, because what I did is I saw that, okay, the taper is definitely going to happen. Inflation is running super hot. They're not going to go down without a fight, quote unquote. So likely they will be tightening. They will raise rates. But the question is, how long can we dance while the music is on, quote unquote? And that's the analogy that I was trying to make in August and October with those tweets is, how long do we have to keep this party going, right? And the mistake that I made as an investor, right, because I'm managing my own money, my own portfolio. The mistake that I made is I thought we would dance for a lot longer, right? So when we were hitting all-time highs again in October with 60K, the mistake that I made was I thought we could easily go to 80 or 90K or 100K.
You're not the only one, though. I mean, there were a number of people that were making this, making the same claim.
Yeah, exactly. So I think, so that, shame on me. I saw the writing on the wall, and, I could have fully de-risked my trading portfolio if I wanted to, but I didn't, right? So it is what it is at this point. And I think the question now, if I can reevaluate the mistakes that I made and sort of looking to where we are right now in this environment is, okay, look, Bitcoin has corrected 40% off the all-time highs, right? Crypto has corrected in many sectors 70% or more off their all-time highs. Indices broadly are not down that bad. I think the S&P 500, I was just looking at this while you guys were talking, is down a few percentage points. NASDAQ is down 7 or 8%. So they have corrected, not super deeply. But if you look inside the indices and you see individual names, you'll see that growth has been absolutely smoked. So there's been a rotation trade that's going on in traditional markets where people are sort of trying to see what's going on with the Fed policy, and they're already rotating funds from growth to value, and you're seeing growth stocks absolutely smoked. So they're down 70%. ARK, which is like the ETF poster child for growth, is absolutely nuked as well. So now the question is really that we have to ask ourselves is how much of this has already been priced in now that, ideally, if you were a perfect investor, perfect trader, whatever you want to call it, you would have read the tea leaves late last year and rotated ahead of the rotation. But now the rotation has in all likelihood occurred, right? So my contention is that almost certainly most of the blood has already been spilled. So it's just like, unless you're expecting equities and crypto to nuke a full 80%, like what else are you looking for, right? Is the question that I would be posing to myself as an investor.
There are people that are on the opposite side of the teeter-totter, though. They're saying that there's more, even down to 25, and some people have even talked about $20,000 Bitcoin. You're saying that you're not seeing that. You're seeing that the rotation's full, and that we should be seeing a recovery coming out of this, as long as the Fed doesn't do something stupid.
Yeah, I'm not saying that we can't hit those levels. So, I'm not saying that Bitcoin can't go to 20,000. I think it's a possibility, but I think at this point, what I'm saying is that the risk reward is skewed to the upside. So when you do probability calculations, you would probably see that in October, if you ask people, what are the chances that Bitcoin goes to 80K or 40K, right? And just use a $20,000 spread or a spread. Most people would have heavily skewed 80K is much more probabilistic. But now that we're at 40K, if you ran that same thing, 20K or 60K or 30K or 50K, you would see that most people would probably bet towards the downside. And when things become consensus, more than likely the meat of the move has already been done, is what I'm trying to say. If you did the same thing back in at the end of the year last year, you probably would have had a very different result. So what I'm saying is that it's not like I'm saying we're going to go to all-time highs. So I will be very clear. I'm not a full-on bull in the sense that I'm not calling for Bitcoin 100K this quarter or next quarter or anything like that. What I'm saying is now that the rotation has been made by all these funds, it is too late to panic, in my opinion. None of this is financial advice, but in my opinion, it's too late to panic. So you should probably just hold or buy more, right? So I was a buyer of support this past week, where we're sitting on pretty much a 12-month support range on Bitcoin if you look at the TA, and it's just a great spot to buy because you're down 40% already. And it's just what's the most likely scenario? Even if you're in a longer term bear, there will be relief rallies. This is a point that I've been repeating lately, but I think it bears hearing because people need to know, even if you're in a bear market, you still get relief rallies up. And sometimes they're viciously up. Even in 2018, when Bitcoin was in a secular bear market, you had 30 or 40% rallies, right? So my whole goal is I'm just hoping that the regular Bitcoiner doesn't get wrecked and get scared and sell here, because I think it's the worst time to sell, right? So, and I know I'll stop here so Nate, you can get a word because I'm rambling, but a lot of this is coming from my poker background and just playing poker for so long. But if you just break down your choices into very simple choices. So in poker, you can bet, fold, raise, right? Right now in these markets, you can buy, hold, sell, right? Really simplistically, you could buy, hold, sell. You could do other things too. You could hedge, you could go delta neutral, you could buy wings or whatever. But if you just look at it super simplistically, buy, hold, or sell, selling looks the worst right here, in my opinion. I think you're going to be selling into support that refuses to break. If it was gonna break, in my opinion, it would have broke over the weekend, when there was less liquidity. So support held over an illiquid weekend. Funding is negative across the board. I should probably post this in the nest, but funding is negative. So pretty much what that means is that short-term traders are going like shorting this rally. So we've had a little rally here off of 39K, like a 8% rally off of 39K, and traders are already speculatively shorting it into big news tomorrow. That's like a perfect setup for a short squeeze. So like selling here is just terrible. I think if you're a Bitcoiner, you hold or you buy, right? So like I think those are both equally good strategies. And then I'll just stop because I know I've been rambling. So
no, it's okay. You know, you've stated your opinion, and there are plenty of people here that have already shared theirs as well. You just reminded me of a disclaimer that I forgot to record, and that is nothing that is presented here should ever be considered as financial advice. These are opinions of mostly non-professionals, and that's all that they should be construed as. So do your own research before making your investments. So going back to Powell, now that we've talked about the traders and the markets and what they've been doing, December CPI is coming out tomorrow. We're expecting it to even be a higher amount than what the 6.8 was in November. I think Jerome Powell's on a tightrope because I think he's run out of ammunition as far as going in one direction. But if he uses too much going the other, he's going to help cause a recession in the meantime. I don't think that's the plan. Some conspiracists would think that it is the plan. Now that you're looking at a lame duck House of Representatives for the most, anybody right now is saying that the Democrats are going to lose the House and potentially the Senate. So and Toomey said, don't politicize the Fed. And Brown and a number of Democrats are saying, no, politicize the Fed because we want you to have an impact on gender equality and African-American unemployment specifically, and not just unemployment as an aggregate. So, he's caught between a rock and a hard place because his mandate is clear. Inflation, employment. There's no color or gender that's attached to those mandates, and yet he's being told by the majority, you actually have to make those into top priorities. Well, if you make those into top priorities, well, then you're actually watering down the priorities that you're actually supposed to be doing. So what is Powell's next step with the December CPI, if it is what it is projected to be?
Yeah, so I think consensus is 7.1. So I think they're pricing in a slightly higher than November print, which was like historically super duper high. I have no opinions as far as like what I think that print is going to come in at. I do know that, so I'm of the opinion, I think most people would agree now that anything within that range, like call it like 6.8 to like low sevens, like 7.3 would be consensus. And then you might see like a little bit of volatility, but I would expect like pretty flat price action across assets. But then if it came in like shockingly low or high, I think you'd see risk assets, act appropriately. So low inflation at this point, because of the clown world that we live in,
right?
A low inflation print at this point would send assets higher, and a high inflation print at this point would send assets lower, right?
If
so
you
see a dump on a high.
Yeah, the thing is though, is that if you see the high inflation rate, you're going to see a dump. But then you're going to see pressure by Congress and elected officials to the Fed of saying you need to raise interest rates. So, which causes even more downward pressure on the market. And like I said, the tightrope. Now we're talking about the potential for a recession. It's just really difficult where we're at to see how there's not going to be some sort of ramifications for anything that the Fed does, either with the gas or with the brake.
Yeah, so I mean, I'd love to get other people's opinions on this, and I can give my opinion. So my opinion is, like, the Fed is going to raise rates this year, right? Mm-hmm. Be it two or three times. But my opinion is that when they do raise those rates, you will either see flat price action. I do not think we will get a nuke in equities or in crypto. I actually think that you may see a pump. And that's a contrarian take at this point. But I hold it for a lot of different reasons. But I'm curious to hear other people's thoughts. Like I know, Dr. Jeff's out there in the room and all that kind of stuff. So for me, like, the reason why I say this is because, like, at surface level, 25 bips on the federal funds rates is nothing.
Right.
Like, it is literally nothing. So what the market is trying to do is it's just trying to price in future hawkishness of the Fed. So the reason why we nuked at the beginning of this year is, the minutes were way more hawkish than people were expecting. They were talking about not even just raising rates. They're talking about like rolling off their balance sheet, which is quantitative tightening, which is the exact opposite of easing, right? So I don't think anyone was pricing that in, but I do think that the 3 raises are priced in now. So that means that when you get that actual raise, it's sort of like a sell the news event, right? Or I guess in that situation, a buy the news event, because prices would go up. So I do feel like the raises are already priced in. And now the bigger thing that I'm watching for is, what does Powell say when those FOMC meetings happen? So, like, what is his stance as he's doing what he's already said he's going to do? Is it more hawkish or is it less, more dovish? And I think today, as I was listening, for me, maybe I'm bullish biased, but for me, Powell was a lot more dovish than I expected. So, like, the things that I heard, I even wrote them down because I thought they were really interesting. So it's one of the senators or whoever asked him about, what is the Fed stance heading into the year? And I think Powell's exact words were, we are going to be less accommodative, but still accommodative. And I'll say he's like a master of his words. Another thing that he said that I thought was really interesting was, we need to wait and see for the data. We'll make decisions based on the data. And he said that over and over again. So what that tells you is that he can change his policy at any stance. I think other words that he also said is like keywords like nimble. The Fed's going to be nimble. We're going to react to the data. So what that means is stuff like the CPI print that's coming out tomorrow is even more important than ever, because if those numbers come lower than expected, you're going to see a face melt, like rally, right? Like a short squeeze. And I think we're set up for one. And I'm really praying that we get one, because obviously, I'm like all Bitcoin. So, yeah. And then the other thing is, when he was asked about like inflation, he still pointed over and over again to supply side constraints, not the demand side. He didn't bring up like federal policy error, monetary policy error. It was always, the chips, the car makers couldn't get chips.
I think, though,
dynamics.
On that, though, Albie, I think that he was afraid of throwing senators under the bus, because he's already got Senator Warren, who hates him. And so he's got to maintain his votes for the nomination. So this was an untenable place for him to be, because he can't very well say, well, that's not my job, that's your job. Especially to the majority, because then he's risking influence in the vote, because he's still under nomination. And I don't, with as close as the Senate is, and with as many people in even the Democrats that are kind of, they're wondering whether or not they want to vote for him, it's still up in the air, isn't it?
I'm not sure. So, like, one thing I will admittedly I don't keep up on is politics, geopolitics, or with it, like U.S. politics either, just because it pains me. Like, it just literally pains me. So I have no comment on that. That's
what I'm here for. I'm here for you. I really am. Q, you've been waiting for quite some time. You are now on the stage. What have you to say?
Nate, I really appreciate, really appreciate you giving me the mic. I wanted to talk a little bit about this YouTube censorship that just happened to Bitcoin Magazine this morning. And then, I can talk all day about Powell, the Fed, and whatnot, but I'm one of the contributors to Bitcoin Magazine Live. I help produce a couple of the segments on the show and develop content.
I am glad you are here, because we were talking about that earlier, and I was hoping somebody from Bitcoin Magazine would come up and have that conversation. So thanks for joining us.
Yes. No, thank you very much for inviting me. There's so much going on in the back channel right now. Someone posted on our Slack channel that you guys were talking about it, and I was like, I need to get the mic. Like, we are trying to ask, and if I can, I'd love to share one of the posts from Bitcoin Magazine and ask people to please be retweeting, please spread the word. We legitimately were only talking about Elon Musk and sort of his flip-flopping on the Bitcoin. We went over and started discussing Jack's tweets over the weekend, specifically how they're investing in ASIC miners. We did a small Bitcoin giveaway, which we counted. We have done about 130 of these small Bitcoin giveaways over the last 14 episodes of Bitcoin Magazine Live. So we don't believe it was any of these three things. What we believe is when we started discussing Kazakhstan, and specifically the fact that the government turned off the internet and all of the energy issues going on, we specifically actually cut out any conversations about violence going on, any of the deaths. All of those figures were intentionally retracted, genuinely because we were worried and afraid that it would get flagged and we would somehow have that video pulled or something would happen to the account. So we were very thoughtful in what we were discussing. But towards the end of the Kazakhstan segment, we were made aware that the YouTube stream essentially had been shut down. And as of this moment, our entire YouTube account with just about 60,000 followers, all of the videos from the Bitcoin 2021 conference last year, as well as all the interviews that we've been posting over the last 6 months have all been taken down.
So what are the steps now that Bitcoin Magazine has to take with Alphabet to try to get that reinstated? Do you know what's going on with that?
So currently we're drafting a response through their channel. Essentially, and I will let you guys know, we're stealing a page from Anthony Pompliano's playbook. Thank you, Pomp, for sharing what happened with you and really laying it out. So they have said exactly to him what they said to us, that something on our account was pushing illegal activities and or inciting violence. We can absolutely assure and guarantee you guys that nothing of the sort was happening. They give you a 1,000 character response to appeal. So we have been going through this most recent video to try and figure out if there's anything in particular that was said that we can essentially apologize to Alphabet for maybe misinterpreting it. We are still torn. As a data scientist myself in a short iteration of my life, I'm worried that this was purely algorithmic and there was some sort of flag after we said Kazakhstan 6 times in relation to it being not far away from protest and internet and government. And as a result, the algorithm, the NLP, natural language processing algorithm, flagged this. And potentially once a human goes back and checks that, they will say there is nothing wrong and reinstate us. However, that is a massive move to make to fully deplatform an entire channel. It would be one thing if the algorithm said, let's just take down this video, but to take down our entire channel as a result, that's why we believe, as Pomp found out, it was an individual who deactivated his account previously. And kind of following that playbook, we're hoping that as we continue to spread this on social media, we want it to be very well known that, you know, this has happened. Please spread the word. Please make it, if we can end this, if this can end up being trending on Twitter, which is what happened to Pomp, the hope is that we can turn around and quickly get back online and get back to producing content for everyone to view.
Yeah, I wholeheartly agree. Matt, you've got your hand up. Did you want to add in on this?
Yeah, I think Q, you're spot on. I understand you've got a data science background. I've got a IT infrastructure and sysadmin background, and yeah, for everyone listening, YouTube doesn't have the manpower to sit someone in front of every single live stream and watch it in real time. Unfortunately, a lot of this is algorithmic, and Q, you probably have plenty of detractors and haters of Bitcoin Magazine who just want to report every single video and live stream you do, and unfortunately, you get enough of those flags and a couple of algorithms trip, and you're right. Your stream cuts off, you get demonetized, or the worst case like this with you and previously with Pomp. All of a sudden, you're having to prove your innocence rather than you're assumed guilty until proven innocent.
Yep, it is a shame too, and regardless of what our political beliefs are, a can of worms was opened last year with the deplatforming of Donald Trump. And I think we are slowly beginning to see more and more aggressive action taken by social media companies across the board and even beyond now with just video platform companies. We've seen Spotify do it with Joe Rogan's podcast before. And like we are seeing full-blown censorship, I think, in ways that is very dangerous for society. And it needs to, these conversations about what is happening are super important so that it is understood that this is unacceptable behavior on the part of a platform, on the part of whoever it may be. And like you touched on, Matt, like no algorithm's perfect, and it could have been a variety of things. Genuine, like I'm at the same time as I'm on this, like I'm muted and camera turned off on a Zoom call with our attorneys while we genuinely just combed through line by line of everything that was said. And I'm trying right now to build an NLP, just quick reader essentially to take this text and be like, does this flag it as aggressive or a sentiment reader essentially? So.
Are you familiar? You guys familiar with what happened with Dennis Porter's YouTube channel a few months back?
We at the company are. I personally am not, however.
Yeah. Okay. So it was but same thing. Was the whole channel was taken down. He Jacob combed through the transcript, and it turned out to be somebody in passing mentioning a certain date in January of last year that triggered it, and then when they appealed, the channel was brought back up. So I'm expecting and hoping that you have the same result.
My fingers are crossed, and we're trying to take as much control back as possible by asking, please feel free to, I posted it, Nate, I hope that was all right. Please retweet that. Please retweet any of the other things that you see coming up. We want YouTube to really pay attention to this because we want to continue to go back to making great content and sharing everything. But yeah, I really appreciate the
by all means. Yeah. The one thing that I said, and I don't know if you're here during this part of my rant, was I said, listen, we're not competitors. I don't work with you. You don't work with me. But the thing is this, we're trying to disseminate solid, reliable information about Bitcoin to the masses. And regardless of who's making the money in the process of doing that, as long as our integrity is intact and your integrity is intact, hey, listen, I'm rooting for you. And I think we all are too. I think I can speak for the whole room in saying that. So as much as we can help you with this fight to make sure that you can get yourselves back on YouTube so that you can share that kind of information, we're behind you. We're absolutely behind you.
I really appreciate that. And, when we get back on, not if, but when, would love to have you come onto the show and just, keep spreading the good word about that nice orange pill.
I would love to do that anytime. Thank you very much.
Thank you all. Have a good
Nate.
one.
Yes.
See you, cute. Hey, Nate, or Log, I wonder if we can get Dr. Jeff up here because I'd love to get also his take on the markets. And if Miguel, if you had like a Bitcoin thing, of course, like go ahead. But I don't know if he's able to talk, but I'm always curious to get Dr. Jeff's take on everything.
I'll let Miguel give his 2 cents worth, and then I will invite Jeff up to the stage and have him talk about that. Go ahead, Miguel.
Hey, what's up, guys? Thank you for letting me on stage. I just had a question because you were previously talking about, raising interest rates. I want to know how this affect, crypto and Bitcoin in general, because, well, to my understanding, it's like, because...
Did he zap out, or was it the...
I think it's him.
I think he did.
Okay.
I think his question was, how does raising interest rates affect Bitcoin or crypto? Right? I'm assuming. At least that's what I caught.
Yes. Yeah.
Yeah. I mean, so in my opinion, it's obviously not great. So, but I think going back to like my whole contention with the room when we started was that they already signaled it and you're already seeing it being priced in my opinion. So any further pain that we get, and this is all my opinion, is that it will come from increased hawkishness that has already not been signaled by the Fed. So like if they were to come out in March's FOMC and just say like, yeah, actually we're going to just run the whole balance sheet off over the course of the rest of this year, then it's like, okay, you'd probably see everything just nuke. But I think the three or four that rate hikes are already priced in my opinion. But like I said, I'm curious to get other people's takes too.
Dr. Jeff Ross is on the stage. I would like to get your take on that. What have you to say?
Hey, Nate, McAlbie, Matt, Log, how you guys doing? Thanks for having me up.
You bet.
I was just having fun listening to the conversation, so I don't mean to drag it down with my sad opinions. But I have lots of thoughts on this, and I try to be clear with my tweets with how I feel about it. Obviously, I'm a Bitcoin fanatic to the end, especially in the medium to long term, absolute Bitcoin fanatic. But I do see clouds on the horizon in the near term. And so that's why I'm just telling people to sort of exercise caution, to be aware. So I know McAlbie and I, kind of have similar views, but I think he takes sort of the contrarian side of it. Here's what I see. I think that in the fourth quarter of 2021, I think that both inflation, which is high, and GDP growth have both peaked. And I think that we're heading into a period of decelerating inflation and decelerating GDP growth. What does that mean? Inflation is still high. And I liken this to over the last, say, 12 to 18 months, we went from 0 to 90 miles per hour on the highway. And now then that's with inflation. So it's very high. Now we're taking the foot off the gas pedal a little bit. It's going down to about 85 or 80 miles an hour. So it's still very fast, very high, but it's decelerating. And that matters in a macro asset point of view. So I just want everybody to understand, I come from a macro point of view. This is how I run my fund. I run a long short hedge fund. I think it's very important to understand that assets move based on what the underlying fundamentals do from a macroeconomic perspective. So things like interest rates, currencies, different equities, different sectors of different equities all act sort of in kind to what's going on sort of underneath the scenes. Now, I came from a value investing background years ago, and most value investors don't believe this, or, they just basically don't believe it and don't really want to think about it. That's totally fine. You can make a lot of money not believing this stuff as well. So I'm just seeing a setup very similar to what we had 2 times in recent history, which I think most people remember back in the fourth quarter of 2018. And again in March of 2020. Those were 2 times where we had this similar setup of decelerating GDP growth and decelerating inflation. I will just say that risk on assets like Bitcoin, which it still is. So again, a quick little caveat. I'm a huge believer in Bitcoin. I think it's ultimately going to be the world's reserve asset. It's going to be the ultimate risk-off asset. I think a lot of people in this room agree with that too. But the world does not yet. We're still a very, very small minority. And so it still trades like a risk-on asset. So what that means is when things get tough in the markets, people panic and they hit the sell button. What do they sell? They sell anything. They sell equities. They sell treasuries even. They sell commodities. They definitely sell their Bitcoin and they go to cash. That's when the relationship of all these assets basically goes to one, correlation goes to one, because everybody's just selling everything willy-nilly. Again, we saw that back in March of 2020. We saw that back in 2018 as well in the fourth quarter. I think we're coming up to another period like that. And I don't say this to scare people. I say this so that people can be prepared. I think everybody should be long Bitcoin for the long run. I think it's very smart to just dollar cost average into it. But if you wanted to be a trader, and have a little fun. This is what I do. This is why I run a fund. I'm building up cash personally because I think we're going to have a quick, big drawdown. So opposite of what McAlbie is talking about, I actually think it's possible we're going to revisit lows that we haven't seen since a year ago. I think it's possible we actually dip below 30,000 again. Maybe even a little lower than that. If we do, I will be backing up my truck personally and buying as much as possible because I think that's going to be the absolute bottom. And I think by the end of the year, we're back up towards the 50,000 range at a minimum and possibly much higher. So that was a really long-winded answer. Hopefully it made sense.
To simplify the answer to Miguel's question, which was what does raising interest rates do, first of all, to the economy, which I think he kind of went on about, and then, but most specifically to Bitcoin. And I think that what you said is because of the deceleration that causes. And I'll just kind of give the analogy. Look, if you've got a house that's $250,000 and you've got a $2,500 payment on it now, well, if you raise the interest rate by just 1%, well, then that might take your monthly payment out of budget, and you have to buy a cheaper house. That's the deceleration of growth that I think, Jeff, that you're talking about in one specific analogy. Am I right with that?
I will say that I think we all give the Fed too much credit. I think the markets move the Fed much more than the Fed moves the markets. I think the Fed can move the market if they make a policy error, and I think they're sort of on the cusp of making policy errors right now. So again, I know this diverges from McAlbie a little bit, but when you have when the business cycle turns, when we've peaked in economic growth and peaked in inflationary growth, and then they start to tighten, as they're threatening to do at least. They're taking away their easing right now. They're doing that rapidly, and then they're talking about raising rates up to 4 times. They certainly may renege on that. I think what's going to happen is they are going to try to raise rates as early as March, and the market is quickly going to tell them that they're making the wrong decision. I think they should have taken away their support for the market last year when the market was strong and the economic conditions were improving. However, now we've cycled, and so I think they're doing exactly the wrong thing at the wrong time. So they may try to raise rates. The market will tell them they're making a grave mistake, and then I think they quickly revert back to quantitative easing again. I think they flood the markets with new supply of money. I think they lower the rates again, and they'll start their treasury and mortgage-backed security buybacks and whatever. I think that's all coming. And then I think that's the time where you want to go back into risk on assets. So that's why I'm actually wildly bullish for the second half of 2022. That's why I'm starting to build up my dry powder right now. So hopefully that answered the question a little bit.
So basically, it's like they're going to chase one mistake with another one. And I think if you heard Pat Toomey's opening remarks to the hearing today, he was talking about the fact that he thought that continuing quantitative easing as the economy continued to get better was a huge mistake. And now they're going to have to, and now they're dealing with that mistake. And I think that that's what's causing this tightrope that I've been talking about. And, now they're going to have to do something. And you're saying that the market's going to tell them that they're making a mistake regardless of how they do it.
Right. They're driving the car, the proverbial car, by looking at the rearview mirror. So they're looking at the data behind them and saying, wow, look at the strong market. Wow, look at the low joblessness rate. This is fantastic. Wow, look at inflation rising. What they don't see, I don't know if they don't see it or they just can't see it because of their policies. It may be that they can't act until they see actual proof of everything happening. But to me, it's clear that like I said, we've peaked in these cycles and now we're moving in the other direction and we're going to start tipping into the other direction. And now would be the time for them to start offering support. They're doing it exactly opposite as how I would do it if I were in charge of the playbook, which obviously I'm not.
Edward, I see that you have requested to be on the stage, but before I let you on, I'm going to have McAlbie go ahead and respond to what Dr. Jeff said.
Yep. So I think I'd love to clarify and add some nuance to my position because I think Dr. Jeff laid his out so awesomely. So I think what I'm trying to say is that right now, I think the market is mispricing the upside. So I think the market is overestimating the downside and mispricing the upside. So I think Dr. Jeff's scenario, what he's describing, is perfectly logical and it has a high probability of happening. So he's talking about, revisiting the summer lows, getting down into that range, the Fed making policy errors, the markets puking because of that, and the setup is similar to prior times in history. I agree with all that, and it's definitely a very strong scenario. But here's where I think our opinions diverge, is I think when you look at it probabilistically, the market is pricing that in, and they're saying that the likelihood of this is very high, and it's much higher than what a general market participant would have said in October or September or November if you asked them the same question. Now, if you ask them that question, everyone would say pretty similar stuff. Everyone's paying attention to the macro, right? So it's pretty similar. So what I'm saying is the likelihood that Bitcoin revisits 60K or pretty much all-time highs at the 60K range, in my opinion, is just as high as us revisiting 25K, 20,000 below or 20,000 above. I think that the likelihood is skewed just as likely, But here's where I think that there's potentials for people, like if you are a bull still, like because because the markets are a little bit more short term, there's a bunch of divergences, right? Where I feel like the bulls are getting in a little cheaper. So what do I mean by that? Like, why did I buy a whole nother Bitcoin earlier this week? Because I feel like that in all scenarios that play out, I do feel like there's a bounce that comes that's a relief bounce. If you look at implied vols on options chains, like IV is super compressed, historically low for Bitcoin. So you could buy volatility for super cheap, and you could buy like short-term calls. These are all things that skew the probabilities in favor of the bulls. So it's like, in general, you want to buy when things are cheap, right? So like right now, the bulls can get cheaper pricing than the bears can. So like if you're a bear, buying puts are more expensive. Selling here, you're selling support. I think 100 million in options blocks just came through for call buying, like for this month, right? For in like the $46,000 strike levels. So it's just like, for me, like at this point in time, if I believe that 60K is just as likely as 20K, like I would rather be a bull, because I think that the bear move has already been priced in. Like look at the recent price action. Like we've already, gone down, essentially straight down 30-40% over the last month. So turning bearish has become much more consensus. Therefore, the pricing you get will be worse than if you were to be a contrarian bull right now. But to Dr. Jeff's point, his scenario is very likely and could be the most likely scenario, but I just don't think that you get a good price if you were to do that. I don't know if that made sense or not, but hopefully I made myself clear.
There you go. Opposing views. That's what we like here on this channel. Edward, you have been waiting for quite some time. What have you to add to the conversation, sir?
Man, not nearly as much smart stuff as McAlbie just did. And I really love listening to you guys and learning from you. So I appreciate it. What I was just going to say is, well, I have a comment just on the Fed thing, and then I was going to ask you guys a question just broadly, if you don't mind giving it a few seconds. But so I don't know anything about economics. I took one stats class in college and almost blew a hole in my head. It was so terrible. But I do know about politics, and what I do know is that the Fed. So yesterday I was on some space. I think McAlbie was there, and it was great. And folks were going back and forth about is the chairman of the Fed subject to the pressure by the president? And I know that theoretically the Fed is an independent entity, but I'm here to tell you that the Fed chair is 100% subject to pressure by the president. And what is 1,000% going on right now is, the thing they do in DC now is trial balloons, right? And so they are floating a trial balloon to see, in my opinion, how the market and more importantly, voters are going to react to potentially raising interest rates. And depending on the reaction to that, they either will or they won't. But I mean, make no mistake, Biden and all the people who work for him in the House and the Senate, they all want to get reelected, and they're not the smartest people in the world, but they're also not so stupid that they don't understand that if people are in a bad situation. I mean, the one thing that's been true in American politics forever is that economics matters and people's pocketbooks are the most important thing in the world. And so these guys' priority number one is to get reelected. And so if they think that in the summer that they're already heading into the headwinds, I mean, I guess they can make one of two decisions. Either he could decide, no, dude, we have to do something to try to get us reelected. And that would mean leaning on the Fed not to raise interest rates, obviously at the bare minimum. But my opinion on the other side would be, on the other hand, they might decide, listen, we're going down no matter what. And so we may as well take the bullet and let the interest rates. So we're going to lose anyway. So now's the time to raise interest rates. We'll be the one to take the bullet. So that's just kind of, actually, before I even ask a question, I'd love to hear what you guys think about that.
You actually, you know what? You brought something up I was thinking about earlier today. I was like, you know what? Do the Democrats really want to try to fix the economy? Or are they trying to dig a hole deep enough that the Republicans can't get themselves out of in 2 years?
I mean, the answer, in my opinion, is always 2 years down the road. That's the why nothing ever gets fixed in Washington, whether it's Social Security or anything else, because the priority for everybody who's elected is to get reelected. The priority for every first-term president is to be a second-term president. And so that's why in America we don't do anything until it's an emergency, because nobody wants to take the medicine.
All right. Well, that little conspiracy question that I had earlier was after only one cup of coffee, and so it wasn't fully thought out yet. So thank you for bantering with me on that. Edward, thanks for joining us here on the stage. Matt,
likewise, guys.
What do you got going on, buddy? Matt, you're up, sir.
Oh, thanks. Yeah, following on that point, Albie, tomorrow when inflation data comes out, what percentage has you rethinking your short-term to medium-term outlook? I have my own thoughts, but I'm interested in your thought.
For sure. So I guess so I think the question more broadly is like, where am I invalidated? Which is like, I think everyone should be thinking about that, right? Like, where would I consider my short-term view wrong? Because I think I've very publicly, come out and said, like, I expect a relief bounce. I expect 50K towards the top of the range, or at least like mid to high 40s, 48, 47, whatever you want to call it. I think the setup is there. So if we get a low print tomorrow on CPI, I think we'll go right up to like 47, and for a lot of different reasons. There's no liquidity there. There's a gap in liquidity for when Bitcoin was transacted. Funding is negative right now, so traders are actively shorting Bitcoin as we speak, right? So it sets up for a little squeeze. And I do think that there's been strong support in this 40K level. Where I would be invalidated is if, let's say, inflation comes in at 9%, something really high, okay, 10%, something crazy. I think that the markets would react very poorly. And if Bitcoin loses that 40K support level, I would consider myself invalidated. And, I would expect what Dr. Jeff is saying, the scenario that he's describing, where we trade in this new range between the summer lows, which is, call it 29 to 30K, to this support, which would become resistance, which would turn into a 42K range. So let's say that we close a daily candle below 40,000, I would consider myself invalidated, and we're likely to see longer pain, because I think this is all, so the way that I break it down is just trading ranges and probabilities. So right now, because this range hasn't broken, I feel like we're still trading in the 42 to 52 range. But if we lose this level and inflation comes really high, I would assume that the Fed would, based on that data, based on Powell's words today, he said he's going to act on the data. If the data comes in hot, I would expect more hawkishness, and the market would try to price that in immediately. You would lose this level. People would get scared. You would start seeing selling. You'd probably trade in lower in that range. So that's what I'm not hoping for. For me, most likely, obviously the probability comes in that the print comes in consensus. So anywhere from that 6.8 to 7, low 7s range, I think you wouldn't see any change in the market, and that's the most likely scenario. But call it, 50% that's going to happen, and then 25% we're coming in hot, 25% we're coming in cold, and then you would sort of see the different scenarios play out. And this is what's beautiful about markets, right? There's so many probabilities. It's fun. It's infinitely interesting. You can have two guys like me and Dr. Jeff that agree on the long terms and pretty much agree on everything, but then diverge short to medium term. So I think it's, that's my take on it.
That's great. Yeah, thanks, Albie. I think it's so counterintuitive. I was trying to explain this to my wife, that because she and I'm sure others in the room are thinking this too. Wait a minute. If the Fed says tomorrow inflation's 10%, why is everyone all in a hurry to sell all their assets and then own the dollar, which they literally just told you was melting at 10% or worse? So, but you're right. It's a short term. It's short-term thinking, because this means they're probably going to go overboard on tightening, et cetera, et cetera. But Jeff, please.
Yeah. Hey, thanks. So just a quick caveat that I want people to understand. Don't forget that the number that we're all waiting for and talking about for tomorrow, the CPI data release, that's the December 2021 data that they're going to release. I actually expect it to be high, because what I'm saying is I think that we've peaked looking back now in the fourth quarter. So we're going to be coming down from that hilltop now. So totally agree with what you guys are saying. I just want to make that clear though. So I'm not expecting tomorrow's number to be low, like I'm talking about decelerating. I actually think it could even be higher than the November CPI print or somewhere right around that area. I don't think it really matters. My whole point is that in the fourth quarter, it peaked, and now we start the descent into 2022. That's what I think. Real quick, that's what I think the markets have sniffed out. And most importantly, I think that's what Bitcoin started sniffing out all the way back in early November. And that's why it's been sort of grinding lower. I think it continues to grind lower until things actually get bad. Again, not to be the bear, but then I think we can possibly see an actual plunge lower, again, akin to March 2020 or fourth quarter of 2018. Sorry, Nate, go ahead.
No, it's okay. Let me just kind of clarify with these questions. Basically, what you're saying is that there might have been a holiday price push because there was accelerated demand because of the supply chain bottlenecks as well, which might have actually pushed the CPI higher than the 7.1 that they're projecting?
I just think I don't make predictions on what they're going to come out with and I don't know that we want to go down this route, but I don't believe the CPI number is actually very accurate to begin with. Whatever number they come out with, I expect it to be relatively high. I expect it to be somewhere in the ballpark of 6 or 7%, but I don't really care what it is. Other than that, I think it peaked in the fourth quarter, and we're beginning the deceleration into 2022. Because to me, from a macro point of view, that's what matters, and that's what moves assets. And that's why I come up with the decisions that I come up with for investing.
Yeah, but if I don't make you a little uncomfortable with my questions, then I'm not doing my job. Miggy, you are next up on the stage. Welcome back, sir.
Hey, thank you. Sorry, my Twitter kind of crashes when I talk. So just to dumb down a little what have been said, since the interest rate will go higher, it will be harder to lend. So people will have to try to sell their equities or their stocks or their Bitcoin or crypto, whatever, in order to get that liquidity into the market, right? And but my point goes further than that. If there has been a lot of money being printed that is going into banks, and then it's harder for people to lend money from banks. Isn't that going to accelerate inflation?
No, what that actually does is it depletes demand because it makes it harder to borrow money. Not only is it harder to lend money, but it's also harder to borrow money. And I made the analogy earlier today because the monthly payment is what most people in America are budgeting for. And so if you've got $500 a month that you can pay for a car and it costs you more interest in order to get a loan for that car, well, then that $30,000, $40,000, $50,000 car that had that $500 payment, depending on the term, is going to be a $550 or $600 payment, taking that car out of your budget, meaning you're going to have to buy a cheaper car or you're going to have to forego buying a new car and buying a used one. That's just one way to slow down that demand of purchasing. So you're not actually increasing inflation. You're actually trying to squelch buying and squelch demand by, if you squelch demand, well, then prices should go down, all other things being equal. Am I wrong in this? Because I'm just a layman trying to explain this in a dumb way.
So my opinion, and once again, this is just my opinion, is that inflation is more of a sociological and psychological phenomenon. So hypothetically, on first principles, if everyone were to believe that fiat is useless and backed by nothing and trash, regardless of what the Fed does, you would run out tomorrow and spend all your money, therefore increasing the velocity of which these dollars change hands, therefore increasing inflation, right? So what the Fed attempts to do is essentially a really good analogy that I've read before, and I forget where, is the Fed is essentially the guy that runs out into the markets, like a street market, and screams out to all the vendors, I will buy whatever you have at any price. And as long as people believe that, people will buy the other goods to sell to the Fed for higher. So what do I mean by that is if the Fed's main purpose is to drive full employment, and they do that through their quantitative easing and all these other tools that they have, quote unquote, what they're really trying to do, in my opinion, is prop up markets, right? And if markets are high, the people that own the equities feel rich and they have a wealth effect. So they will go out and spend money. So if they want the economy to run hot, they'll prop up asset prices so that people will feel rich, so that people go out and use the money, and therefore increase inflation. If they feel like inflation is running too hot, they will drain that liquidity, which will make people feel poor because the asset prices will go down. And then you will see essentially the velocity of money slow down because people are scared. And it's all reflexive, right? So it's recursive too. Like it keeps happening over and over again because until it hits like an inflection point. So to answer your question, Miguel, is like, I think that if they drain the liquidity, it's going to affect asset prices first, which we are seeing, which will make people feel poor, which will cause the disinflation that people are thinking about. So I don't think that it would cause inflation. I think it would be the reverse. But like on basis first principles, it's all nothing. It's all a nothing game, right? Like it's all a confidence game. So it's like, as long as they are able to convince the markets that they are able to do this, people will react with their money in a certain way. But if confidence was completely lost for whatever reason in the fiat dollar, regardless of what the Fed does, it would inflate the currency, right? So then this is, once again, just a McDonald's employee's opinion.
Basically what you're saying is that the network effect or the size of the community that thinks that a particular marker is of value, is a store of value, and it can be easily transferred from one person to another within that community, then the greater the purchasing power of that marker is going to be, whether that be the dollar, whether that be Bitcoin, whether that be the euro. And the Fed's job is to make sure that more and more people think that the dollar has value. That's
exactly.
That's it.
Exactly. So in that hypothetical thought experiment where let's say that for whatever reason, Bitcoin became the standard, and tomorrow everyone, like all the smartest people in the world, all the billionaires, they all revealed that they only hold Bitcoin, and they came out and they said fiat is trash, and you saw this like repricing event. Like regardless of what the Fed does at that moment, the currency would just hyperinflate because it's all a psychological game. Like it because it is backed by nothing, that is sort of that's one of the reasons why I love Bitcoin, because the probability of that happening is very low, but you get that call option on that happening forever, in perpetuity, with no time decay. Like as long as you hold Bitcoin, you're getting that call option on that scenario where psychologically confidence in fiat is lost. So yeah.
Yeah, thanks for that. Anthony, you are up on the stage. You are next on the Bitcoin effect.
No, I got nothing. I was just everything Albie said was completely accurate. When it comes to the Fed, they do consider the external sector, like the dollar and the strength of the dollar is relevant as to how it affects like net exports, capital flows and stuff like that internationally. But it's also like most directly the cost of money. So everything Albie said was completely accurate. But looking specifically at like the dollar is not like the primary nexus of like where Fed policy kind of rubber meeting the road, where like the transmission mechanism of Fed policy is affected. And in particular, like if you look back 20 years ago, it was a larger consideration for the Fed, in particular because like of the energy deficit we had as a country. So the price of the dollar affected energy imports, and energy imports as a percentage of the consumer basket were huge. As a percentage of exports or imports, net exports were huge as well. So it's still a huge consideration, but where the rubber really meets the road for Fed policy is the cost of money, interest rates, particularly short-term interest rates, right? So longer-term interest rates are a whole separate conversation, but I wasn't going to say anything until you called me because everything Albie said was correct.
All of a sudden, I saw you up as a speaker on the stage. And went, oh shoot! Did I miss somebody? Did did Log send somebody up? But hey, glad you chimed in.
I had a question, but Albie addressed it all. It's all good.
Oh, fantastic! So, as far as the Fed is concerned, and we've dealt with the topics that we wanted to deal with. First of all, Powell and the Fed and December CPI, which we're all speculating on whether or not it's going to be higher or lower than 7.1%, and whether that's going to cause an upswing or downswing in the markets. We've talked about, and thankfully we had Q from Bitcoin Magazine come up and talk about what's going on with YouTube having banned their channel. The one thing I hadn't talked about, which was really tertiary to the other two, was Peter Schiff having taken the opportunity to kind of troll Bitcoiners as the market dropped from the beginning of the year. But the thing is, though, is that you've got Goldman Sachs and other large operators that are saying gold is going to lose market share to Bitcoin. Y'all find that to be true, or is it too soon to tell? Obviously, we all think that Bitcoin should just take all of the market share away from gold. Why is that? Do you think that's going to happen more or less than 50% of the store of value market this year? Tell me what you think.
All right, I'll since y'all hate me already at the thought of being even more hated and getting kicked off the stage.
Stop it.
I'm going to say something blasphemous. I think for the next 4 to 5 months, I think gold actually outperforms Bitcoin. Sorry. After that, I think that Bitcoin drastically outperforms gold and all other asset classes. I think over the long run, it's clear that gold is actually being demonetized. It is less and less being considered as a store of value. And by the time I'm old, I'm 47 now, so by the time I'm at like 70, I think gold will just basically be thought of as a relic, as jewelry, and basically no longer as a store of value. So I actually think it basically, in today's dollars, it actually decreases in value over time as Bitcoin kind of gobbles up that store of value property that gold has.
I think that too, and I've referred to it as monetary premium. I think that gold is losing its monetary premium to Bitcoin, which is the only thing that Bitcoin has, and it's the only thing it should have. Talk to me though, and don't apologize for it. Give us your opinion. Let us know what you think the next 5 months holds, and do you think that gold stays flat as Bitcoin continues its downturn, or do you think that it's gonna go up as Bitcoin either stays flat or goes down? And tell me why.
So again, based on my views that I talked about earlier, I'm basically bearish, right, from a macro standpoint for the next 4 to 5 months. Safe haven assets, risk off assets tend to do well. So the ultimate safe haven asset is the U.S. dollar, and that's because when people panic and get scared, they hit the sell button, and what they end up buying is the dollar in general, depending on where you live in the world. Other safe haven assets that are just a little bit behind the dollar are U.S. Treasuries, usually long-dated Treasuries. Short Treasuries also tend to do well, short-term Treasuries. And then gold also still traditionally is a safe haven asset. So I still think it outperforms risk on assets, and Bitcoin being one of those volatile risk on assets for the time being. So I think gold will outperform all of those. And I think then when the Fed realizes the horrible mistake they made because the market is tanking, they reverse course, and then we go back into risk on mode, and then gold resumes its underperformance for the next many years.
Okay, gold versus Bitcoin over the next year. Who else has an opinion?
I think I agree with Dr. Jeff. Long term, I think gold is just at this point trash. And this is coming from a guy that I've always had a gold allocation in my portfolio. So before I fully essentially went all in on Bitcoin, I did have like a breakdown in my portfolio where I was allocated 25% to gold and gold miners, and I cut that position once I realized like gold is not doing what it was promised to do. And I'm glad that I did, because honestly, from COVID on, it was really the perfect storm for gold, and it should have performed amazingly, but it didn't. And I think when I saw Bitcoin doing what gold was supposed to do, that's when I cut those positions, and I rotated completely into Bitcoin. And I think we're all in agreement in the sense that over time, I feel like the market will come to see that Bitcoin is everything gold is, but way, way better. So I think that's almost like a layup. Like I've said in these rooms, like Bitcoin overtaking gold's market cap is such a layup to me that like the probability of that happening is fully mispriced. And I see it as a high likelihood. So that's like a 10x from here. In the short term, I'll disagree with Dr. Jeff again. I think Bitcoin and gold, I don't think that gold is going to perform that well. I would expect it. Like, I think the most likely scenario is that I'll see $1,800 gold right now, and 3 or 4 or 5 months from now, I'll probably see $1,800 gold again. And then a year from now, probably the same price. And then you'll have the Peter Schiff meme of him like getting older, but gold staying the same price. I think that will continue on for a long time.
Yeah, it just seems as though he's looking for opportunities to take his shots, and when he does, we're like, oh, I guess it's time to buy now. That's sort of been the meme. It's just like if Peter Schiff is tweeting, then we need to just keep buying.
If I can add too, like the price of gold tends to move inversely. All else being equal, price of gold tends to move inversely to real interest rates too. So like you have rising real interest rates right now. So I think that's kind of an interesting consideration on top of it all. I guess it depends on your outlook for interest rates.
Yeah, and I'll also, the one other thing I'll add is if you have that view that gold traditionally should outperform in this kind of environment, I think that there's better ways to express that, like with oil or something, in my opinion. So I think energy, you can say that it's set up really well to explode higher, and I think that you can pretty much get that view expressed in your portfolio through oil, in my opinion, if you wanted to do that.
I think silver too.
Yeah, like pretty much
You're
commodities that are not trading on a monetary premium, like commodities that are scarce and the market demands for other use cases and utility, but like doesn't compete directly with Bitcoin, because I think the market has already sort of shown that Bitcoin is a much better tool for that monetary premium, in my opinion.
I think it's interesting too, because we talked about this, I think it was back in February, January, that like Bitcoin has stolen a ton of market share from gold, specifically like investable gold. So like gold that's held as investment as opposed to like industrial applications or jewelry and stuff like that. So that's a $2 trillion market for gold. And that happened to have been about the market cap of crypto at the middle of this year, which is interesting. Bitcoin obviously hitting $1 trillion. So I do think it's history. It has stolen market share. I think that's incontrovertible. Obviously, it's given a little bit up, but
I'm going to interrupt let me interrupt the gold versus. No, I need to interrupt the gold versus Bitcoin conversation because Q just came back into the room. I brought him up as a speaker. I'm hoping that he's got an update as far as Bitcoin Magazine and YouTube is concerned. Go ahead, Q. Welcome back.
Thank you so much for having me back up, guys. And yes, a very exciting turn of events where I think all of the Twitter sort of backlash to YouTube, as we were drafting our response, we literally found out that boom, we're back up and operational. Matt, your breakdown of the NLP stuff was super helpful, and I think when I shared that with our attorney, we were kind of all on the same page of that. And I think everyone who was tweeting out and just sort of in support of us, like, what is this? What is going on? That was definitely the straw that broke the camel's back on YouTube side. We're going to go on live shortly, and we'll be chatting a little bit about this and what happened. So thank you guys, everyone in here, for really helping to spread the word and make it happen. So glad I can come back with some good news.
Q, that is good news.
Wonderful.
Absolutely great news. We're glad that you were able to come back and share that with us. And with that, that's going to be the end of today's episode of The Bitcoin Effect. It is almost 4:30. I know that directly following this is going to be Bitcoin and Chill. So anybody who wants to stick around and continue the conversation is welcome to do so. I want to thank Q from Bitcoin Magazine for giving us those updates as far as the YouTube Bitcoin Magazine situation was concerned. McAlbie, thanks for being my guest today and fielding all the questions that I had about macroeconomics and Jerome Powell and the Fed and speculating with me as far as what's going to come up next. Matt Coons and Dr. Jeff, always great contributors to a conversation when it comes to those specific issues. Anthony, well, thanks for joining us. Miggy, for being up on the stage. If I missed anybody that was on the stage, I apologize for that. But make sure to join us next week, Tuesday, 3 o'clock Eastern, 12 noon Pacific, as I will be hosting and interviewing Scott Sibley with his new product, educationally, for Bitcoin and teaching your kids more about it. Until then, hey, if you're listening to a replay of this episode of The Bitcoin Effect on YouTube, Spotify, or Apple Podcasts, thanks for joining me. Hey, listen, consider leaving a comment or review saying you'd like to hear more of what we're doing here. Join the conversation next week, again, Tuesday, 3 p.m. Eastern, 12 p.m. on Twitter Spaces. Visit thebitcoinspot.net, click the link and follow The Bitcoin Spot and watch for the link in your feed. Again, thanks everybody for joining me, everybody who's been listening. It's been a pleasure to have you, and I look forward to seeing you again next week. I'm Nate Martin, and this has been The Bitcoin Effect.